Hello friends, Namaste. Welcome all of you to my channel. Today I will be discussing about how could we prepare the balance sheet based on the available information. Before moving to this topic, let me clarify about that there are basically the four types of financial statements. One is called the balance sheet. Second one is called the income statement. Third one is called the statement of return earnings, and the fourth one is called statement of the cash flows. Basically, we prepare the financial statements with the hope that we could understand and know about the financial position of our company. Reason is that if we are not able to at least estimate our financial status, then we cannot project our business smoothly, friends. That is why there is a need of your preparing the financial statements, and that's why in a company there is an internal audit and the external audit department also. In internal audit we check all the financial statements, and in case of a external audit, your auditors or the, let's say, the chartered accountants who are auditing your company's financial positions, financial statements, they could see, and then they finally provide their audit reports. Now in this background, today let's discuss about based on your available given information, how could we prepare the balance sheet. Today's video will be helpful to the undergraduate level like your BBA, BBS, BCom and other students. It could be applicable to the MBA level also. It could be foundation level. Now look at the given information first. As we know that that's the asset equals to your liabilities and equity. Asset must be equals to liabilities and equity. That is your accounting equations. Then under assets, it could be like your current asset, fixed asset. Again, fixed asset could be tangible, intangible, fictitious assets, natural resources, and the investment also. That is the part of your assets. Under liabilities, that is the current liabilities, long-term liabilities, and the equity part. Now look at your cash part. Cash is the part of your current asset, that is must liquid assets. Okay, friends, see your cash is we have about 29,000. Now next one is the marketable security. Like marketable security is 42,100. Now debtors, or we say the account receivables, when you are selling the goods on the credit, then that is called the debtors. That's the 1,28,000. Then next one is your inventories. Inventories is also the current assets, parts of the current asset. Okay, inventories. Now after inventories we have our prepaid expenses again. Okay, that's the inventories. Inventories, prepaid expenses, that's you already paid to the parties. That could be your part of the prepaid expenses. That is your 9,700. 9,700. Okay, now once we add it, then that will be the, okay, that's in how much the inventory we have. Inventories is the 2,74,200. 2,74,200. Okay, look at your figure first, because you have to be careful while recording the economic informations. That is the basic purpose of your accounting. We record all the information systematically. Now you say you get the sum here, then that is your 4,83,000 is our current assets. Okay, now what about the fixed assets? Under fixed assets, look at what about the land value is the 50,000. Okay, it could be any value. You just list under the land. Building is 4,12,000. Okay, 4,12,000, that is 4,12,000. Next one is what about the solar equipments? Solar equipment is simply, it could be like your use for agriculture related, for the agriculture purpose, you see. That's building is the 4,12,000. Okay, we use it. Now solar equipment is the 48,000. 48,000. Now what about the office equipment? Office equipment is the 17,600. Okay, Okay, that's a 17,600. Now look at there is a accumulated depreciation, that is also called your total depreciation. Depreciation is the non-cash expenses. Okay. Now this is your accumulated, or we say the provision for depreciation is the, we say that need to be either you deduct from the your fixed assets, or you could list under the liabilities also. Okay, that's a 1 lakh accumulated depreciation. You just say less accumulated depreciation. How much we have a value is a 1,15,200. Okay. Okay, then that's a less, and you can use 1,15,200. Okay. Okay, 1,15,200. Now look at your, what is the total value? Total value is a 4,12,400. Now what about the intangible? That we could just fill it like your trademarks. Trademarks is a intangible is the 20,000. Okay. Now what about the goodwill value? Goodwill is 15,000. Okay, 15,000. Now it the patent, if you do the research, if the company do the research, that's the patent, is the again the intangible is the 5,000. Now next one is the your amortization part. Now that's the accumulated amortization will be in the case of your intangible, remember friend. But if there is a accumulated depreciation, that need to be excluded from the your total fixed asset. Okay, that is the 8,000. You just less, you can use the bracket, is the 8,000. Now what about the value of the sum here? Sum value is, okay, that's a 32,000. Now look at your investment. Investment is also the assets. In a company invested in the stock is the 1,75,000. That's a 1,75,000. Similarly, is the investment in the bonds is the long-term investment. Investing in the bonds, remember, is a lesser risky than that of investing in the stock. That is a part of your investment part. Okay. Now investment in the bonds is the 62,000. Okay, low 62,000. Now you just total, what's about your total investment is the, you say again sum. Total investment is your 2,37,000. Okay, that's a total investment. Now I would like to know the what's the total value of your total assets. Okay, now total assets, you just increase the size first so that you could see it, right? Okay, that's a, you use the total figure is your, that's a current asset we already calculated. Next one is the tangible part, this figure. Next one is the intangible, plus next one is the your investment. Okay, then just you enter it. That's your 11,64,400 is our total value. Okay, but that is the part of your assets. Okay, now look at your liabilities part then. That's under the liabilities. Look at the there is accounts payable. Accounts payable is if you are promising to pay verbally, that's called account payable, 1,59,000. Okay, okay, so 1,59,000. Similarly, other one is the, what about the tax payable? Tax payable, let's see, to the governments. It's anyway, it's given is a tax payable. That's a 42,700. That is 42,700. Okay, just use it. Now what about the outstanding expenses? That is also known as your accrued expenses. Okay, like your wages payable, whatever the payable you say, that's a salary payable is the outstanding expenses. But anyway, we are given is a 29,200. 29,200. Now similarly, you just find the total. You just take the sum, then you get the 2,30,000 is our current liabilities, or we can say the short-term debt also. Now what about the long-term liabilities? Which short-term liabilities mature within a year, while long-term liabilities is the maturity period is beyond the 1 year. Okay. Now the term loan, that's the 50,000 again we have is a 50,000. Now what about the mortgage payable? mortgage payable is all about when you borrow money from the financial institutions, then we have a mortgage loan, that is the payable, 2,88,400. Okay, that's 2,88,400. Now what about the bonds payable? When the company needs a long-term finance, they could issue the bonds. That's anyway, that's a 50,000. Okay, you could check it. Your value, your asset must be equals to the liabilities and equity is the 50,000. Now what about the total here? Sum. Okay, sum is the 3,88,400 is our long-term liabilities. Now what about the equity part? Equity is the, let's say, the share capital. Capital stock is the 100 is the par and the 2,500 share issues. Okay, 2,50,000. That's a, you say the 2,50,000. Similarly, retained earning left after distribution of dividend is known as the retained earnings, is the internal source of finance. However, it has a opportunity cost. We say 1,70,000 is the we have a, what about the retained earnings? We have 1,70,100. Okay, that's the capital stock is here. You can use here. Now what about the retained earning? We have additional, okay, that's the paid in capital in excess of par, that is your share premium, 1,25,000. 1,25,000. Similarly, look at your retained earning value. As I explained earlier, the company basically retained for the future reinvestment purpose or the growth purpose. Now retained earning is the 1,70,100. 1,70,100. Okay, you could again check it. Now what about the total equity? Now you just sum it. Sum up to, that's a capital stock paid in additions to paid in capital, yes, share premium, that's a 5,45,100. Now what about the total liabilities and equity? Just you say is the current liabilities plus long-term liabilities, then you say equity part. But as I explained earlier, in the beginning, your asset must be equals to the liabilities. If your both values are not same, then we say that your calculations, you have to revisit your calculation, friends. Company need to prepare the balance sheet. Basically we would like to know the funds that we raise through the, let's say, the financial institutions or the raising of the funds, either debt and equity, then we are using in the assets. That is your asset parts, current asset and fixed assets, and liabilities and equity is all about your sources of funds, we say. Okay, so these two, asset and liabilities and equity, needs to be equal, friends. Important point is that based on your investment strategy of your company, you have to park in the different assets. If you are taking the more risks, then you would be investing in the more fixed assets. While fixed asset cannot be cashed within short period of time. So that's why we say there is a risky. While in case of your current assets, all current assets may not be liquid, friends. Only cash, marketable securities could be a must liquid, while prepaid expenses and the inventories are the less liquid as compared to cash and marketable securities. Now in case of your intangible is all about your, that's why we say the trademarks, like your company's trademark is there, like your Bata company's trademark is there, Godrej trademark is there, etc. Goodwill is all about your, you earn based on your what? Let's see, the reputation part is the your goodwill. Patents is based on your research, and as I explained earlier, you have to exclude the accumulated amortization in case of your patents, yeah, intangible part, while accumulated depreciation should be excluded from your tangible fixed asset, excluding the land part. Okay, now under the, like your current liabilities, we say the liabilities which mature within a year, that's called short-term debt which mature more than 1 year. That's the maturity period is more than 1 year. That's called the long-term leverage, friend. While equity is all about your capital stock, additional paid in capital, retained earnings. These are the basic component of the shareholder equity, friends. Okay, these are the basic content that I would like to share today. If you like this content, please like, subscribe and share this channel. Thank you for watching this video. Please take care.